It's our Forex blog for September 18th, 2012. And like we do most days, the first step of our three-step easy Forex trading system is to look for buys in the strongest currency versus the weak and selling the weakest versus the strong. You can use our sortable currency meter, and you can see the CAD, dollar, New Zealand, and pound are the four strongest. The weakest today are the euro. It's going down against 100% of other pairs over the last hour. Swiss, Australian, and yen are also weak. So that being said, the real-time trend is on the top. Underneath that we have 15-minute trend, hourly, daily, weekly, monthly. The more time frames that line up, the higher your odds are. For example, here at 7:30, we see incredible momentum in the New Zealand. Pretty much all the time frames are up. What's one of the weakest ones at 7? Previous to that exact moment, the euro was consistently weak. The Australian also got a little bit of strength a little bit after 7. But if you were looking for a high odds trade, you want to buy the New Zealand against the weakest one, which is the Australian. So the Australian is on top. The Australian New Zealand is likely to fall around 7. Let's bring this chart up here. Here's 7 o'clock. You can see it was in a downtrend. This has a double bottom. You can also see a nice little consolidation pattern here. Rectangle pattern breakouts tend to, lead to profitable trades. In this case, it did break down about a half an hour later, and it only went down a little bit and it reversed. And you can see if you're watching our currency meter in real time that unfortunately the weakness in the Australian, disappeared, and the New Zealand was strong until about 9. But anytime you have two currencies that are both strong, this one got really strong at 8, it's going to go in the direction of the stronger of the two. But it did give you the opportunity to make 10 pips on that trade. Let's take a look at the euro that was consistently weak all day, especially earlier. You can see the dollar was very strong. This is a currency you want to focus on looking for sells in. First thing to look at when you bring up the chart is where is the point of control. This is where the currency spent most of its trading activity yesterday, and that's right here at this price, 1.3118. Underneath that it tends to go down, above that it tends to go up, and then you can see the green and red value area. This is where it spent 68% of its trading activity during the previous day. So obviously these are very key levels. Breakouts from above to below the lower band tends to lead to a trend. In this case it failed. The second time it did, then it acted as resistance here, and you can see continuations throughout the day. I am working on redoing from scratch our FX trade signals with a lot more rules, using all the daily, weekly value areas, and even intraday 60-minute, 30-minute, and 4-hour value areas. They're absolutely critical. But if you put them all on the chart, you're going to have a hard time. If you put all those on there with the previous days, weeks, and months, high and low, daily, weekly, monthly pivots, you're going to get information overload. And that's why I'm working on creating enhanced and improved signals that allow you to spot the high odds trades. Let me give you an example of what today's looks like with the euro dollar. I'll bring it up right now. You can see, pretty much found most of the moves. This one here failed, and this high here. This one here, might have led to break even or small win. It found this sell right here, which led to about a 30 pip drop. This one here is a failure. This one fell about 20 pips. You would have either had a small win, break even, or a 4 pip loss here. This one led to about 15 pips. This was a loss. This one worked. And the key to trading is small losses, big wins. This last trade right here, you would have been short when it went a pip underneath that bar's low at 65. You can see it pull back 25 pips. So obviously one big 25 pip win can get rid of, this win alone gets got of the 6 or 7 pip loss here, 6 pip loss here, 6 pip loss here. Just that one win got rid of all of them. Plus you have this win here, this win here, this win here, and obviously this one right here. Let me zoom out on the chart so you can see the sell right here, nailed that high. Which, you know, our old signals did not give a sell signal on that particular bar. So the new one is, you know, showing very good promise. That's what I'm spending all my time on, trading and trying to come up with, you know, insane complex rules that try to get rid of all the losses without missing some trades. See, the more rules you put in, you definitely get rid of some of the losses, but unfortunately the side effect of that is you get rid of some of the very good and profitable trades. So again, the key to trading is small losses, big wins. You're never going to completely get rid of the losing trades. You know, it's my goal to cut them down as much as possible. I think I've cut the losing trades out compared to the one you're looking at now on the chart, about 20 or 30%. I've cut out trades that don't pop up now that are losers, and you know, I'm going to put a lot of effort in there to put the higher probability trades with bigger circles and triangles and the lower probability ones with smaller ones to make it even more probability. So again, the euro was relatively weak all day. The New Zealand was strong. You could have focused on selling the euro New Zealand just like you did with the dollar. Take a look at this chart. And you can see it pretty much fell all day long. Most of us use 5 pips per bar chart instead of a time-based chart. And when this comes up, you'll see it probably gets rid of a lot of the noise in the market. One of the things I do when I look for trades is kind of eyeball a decent sized pullback. Each currency is different. Most of the time I look for a 15 to 25 pip pullback. So these, in this case, are not enough of a pullback for me. The second pattern I look for in trading is a rectangle pattern. If it goes sideways for 30 minutes to 2 hours, the longer the better, you will sell the breakout of the, in this case, breakdown of the low. And this one here at 58.10, you draw your fibs off the previous swing. And it went to the first fib target. You always, if it stalls at the first fib target, I always tend to exit half of my trade. And then it came down, and very rarely, probably 90% of the time, markets do not go past the 2.0 fib level. So draw the fibs on there, get out of half your trade here, the other half here. Your average exit would be somewhere in the middle. Let's just say 57.80 in your short up here. So you made about 30 pips on that trade. And if you put your stop right up here above, you know, the high of that rectangle, you are basically risking 10 pips. So anytime you make, you know, 1.5, 2 times, or 3 times or more of what your risk is, that's good trading, and that's really what you want to focus on doing. You know, you can see the dollar was strong today. The Australian was weak, so you could have looked at selling the Australian dollar. Notice on this chart as we zoom out, the point of control of yesterday, the price most actively traded was here. The lower value area is here. And every time you're underneath the lower value area, you know, it's very likely to trend down today. And you can see, you know, this applies really at 6 o'clock. Here's the previous day's low. You had a head start of a breakout below the previous day's lows just by simply being below yesterday's value area. So once you see a down move with a lot of intensity, all the time frame trends are down except the monthly, which is still up. You have a nice trade here. This, if you look at the low here of that bar, it's around 48. It moved all the way up to about 62. So it made about a 14 pip move up. You don't have to draw a line in the sand when it comes to the number of pips to, you know, look for a reversal. It's just a pretty high probability trade after you get a 3 or 4 bar reversal after this kind of weakness. Always use our real-time build your own trend tool too. It went up with relatively moderate strength, and then it fell off a cliff here and pretty much showed no more signs of strength. And you draw your fibs off of that last wave, and you know your profit target, you know, pretty much, you know, before you get into it. And look where it went. it finally made its way down to the 2.0 level. And like I said, 90% of the time markets don't go underneath there. So, you don't want to take trades. This trade right here is a pretty low risk trade. We're not going to be taking trades like that in the future. The new system gets rid of low odds trades like that. Probably would still have a trade like this on there because it made a decent enough size move up. But basically trading this one today, you have a very big win here. You might have taken a small win in these two trades. You would have had a loss here, and I think our new system would have found this sell right here, which our old system didn't.